what we're holding at. Let's focus on a stock that's been literally buzzing around. Som Distilleries, the stock is on our radar. Remember, it's been buzzing in trade. It's up close to around 27% in a month. Even this morning, it's higher in trade. One of their wholly owned subsidiaries, well, they've started commercial production of beer. Mr. J.K. Arora, Chairman at Som Distilleries, joins us on the show. Hi, Mr. Arora. Good morning, and thanks so much for joining in. Well, we spoke to you, I think, a couple of months or so ago, and you were sounding extremely optimistic. So, since you're in silent period, we don't know anything about FY23. But with regard to FY24, you had put out some numbers that you'll do close to around 1,000 crores of revenues, margins in that vicinity of around 13 to around 14%, and your market share as well will go towards around 15%. Do you hold on to all those three, revenue, margins, and market share?
I believe the figures are going to be a little better than this. It's not going to be anything lesser than that, because the capacity expansion achievement has been done on time just before the season. So we hope to achieve all that numbers, and more than 1,000 crore revenue is for sure.
But how much more than 1,000 crores can you do since your expansions have come on stream? Do you want to revise that number upwards to say 1,100, 1,050, or for the time being, do you want to keep it at just 1,000 crores plus?
Yeah. I think because of the cooling period, I think let's not talk on the numbers, because we have the result due on 26th April. But as I said, since the earlier in Madhya Pradesh and our Bhopal unit used to have 30% bottles and 30% can and 70% bottle sale. And now, after this our expansion, which has been just came on time, the ratio has just reversed. 60% can is being sold now, and 40% is the bottle. So, which is a very big boost to us, because we have put up with a capacity 3 times of our capacity of the canning. And this same time, this boom has come. So, we are going to be really benefited from this. And same time, our Karnataka unit has also gone from 45 lakh cases to 90 lakh cases, double the capacity. So, that is also has come on time. So, even after doing this double the capacity in Karnataka, we are still short of capacity. So we are fully utilized. So let's keep fingers crossed. We hope something better is going to happen in the coming financial year.
Good times are flowing, huh?
Yeah.
I was just thinking, it's such a great business to be in, right? I mean, temperatures are soaring, and the only way you can beat that is by opening a cold one.
You can have chilled one. You can have ruafza, Sonia.
Teetotaler. Teetotaler is talking it there.
Anyway,
by the way, I am also teetotaler.
Oh wow!
Wonderful, sir.
I don't know how you managed to do that, though.
Running,
being in this business.
Mr. Arora, but we don't really do research with regard to the annual reports and the financials. I called up the local vendor down the road and I've asked them a few times. They said that they don't have all the brands that you sell, Hunter, Blackford, as well as Powercool. For the time being, I think you're focusing on Madhya Pradesh, Karnataka. Any plans on getting into the Maharashtra market?
Yeah, I should tell you what exactly you should, since you are into a business of knowing the companies. I will tell you in just 2 lines. You see, it is in Constitution, the liquor business is delegated to state governments. So when we do the business, when we do the business in 26 states, we are doing the business in 26 countries, because every state has got its own sets of law, own sets of rules and permissions. And from one state to another state, when we transfer the stocks, it is a export tax and import tax. The state you are producing, they put the export tax, and the state which is you are bringing in, they put in the import tax. So it is this thing. So you need to have either a neutral territory like Delhi. Delhi does not have any manufacturing unit of any kind of liquor. So you have a equal level of field for everyone. So there is no issues of the import tax or export tax. But anyway, like Maharashtra is almost having the import tax of the, say, 40% of the cost. this thing. So if you have a margins of say 15%, 20% or 14%, 13%, how can you pay the 40% of the import tax? So this is the issue actually. But wherever we are present, we are in a excellent, like in Madhya Pradesh, we are number 1. Karnataka, we are there, we are number 2. Odisha, we are number 2. Against the United Breweries, which has been a very, very established and enjoying the 50% market share in the country. We are into number 2 position. Delhi, we are number 2. So this is as far as Maharashtra is concerned, we are there, but we are not there in a substantial way. So unless we have our manufacturing setup there, either by way of tying up with someone or maybe our own manufacturing unit, you cannot grow in a bigger way. That is the
Got it. Mr. Arora, would you is that under consideration to set up?
Yes, very much. We are the states on our radar is Maharashtra, Telangana, Tamil Nadu, and UP. These 4 states are in next 2 years. We are targeting for to have our production arrangement there in all these 4 states.
And these will be, and you will. Right. Mr. Arora, you will set up your own units, greenfield, or you will tie up with somebody in these states?
It depends on opportunity. Like in Maharashtra, we have talking with for some 2-3 units for a takeover. If that gets through, fine. Otherwise, option of putting a greenfield is always there.
Okay.
And how much do you plan to, I mean, if you were these conversations that you're having in Maharashtra specifically, what is the size of these, I mean, how much would you have to pay to acquire these units?
300 crores approximate. It means
300 crores.
200 something is for the unit and then another 100 crore for the working capital.
Okay. And we will, we could hear something soon, sir, on this front?
Yeah, as I said, we are working on these 4 states simultaneously and whichever comes first is most welcome, because all these 4 states are almost equal and almost potential and most suiting to our portfolio of our brands.
Okay, I'm sure there's a lot of excitement here in the studio to know that you're coming to Maharashtra in a big way very soon. The excitement is palpable here. But tell me a little bit about overall market share. 15% is the market share that you are guiding for by the end of FY24. How do you plan to get to that? And over the next couple of years, what would your internal target be?
You see, the things are quite bright. I would say everywhere, wherever we are, it's doing pretty well. And fortunately, this business is also a game of scale and the capacities. So we are at the most advantageous position in comparison to all the players in the country. You see, we are the one who can take quick decisions and can grab the opportunity. So we say like this addition of capacity. Last year, we were hardly utilizing the capacities of Karnataka and Madhya Pradesh. But we could see the potential and we took the decision very fast to add on the capacity, and we did it and we got the advantage. No company, especially multinationals, can take such fast decisions and get this thing. So business is one thing that if opportunity knocks you, you should grab it. So we are that advantageous position on that, and we are on our way, and I am quite sure that things are going to be quite better in the coming years.
Mr. Arora, just one question. You said with this Bhopal unit, canning unit, 60% is cans now. This is 60% overall sales? Or this is out of
Yes.
60% overall beer sales are canned?
Yes. If the 100 bottles are sold, 60 bottles are in the can, and which is actually beaten all our estimates also.
Right. Aren't bottles so cheaper? Is it? I mean, what's the trade-off? Why would you? I mean, I'm assuming cans are more premium in that sense.
You mean draft beer? Is it?
No, I'm saying the difference. Why would you go for cans instead of bottles?
No, it's not what we go for. It is all the consumer what they want. It is this is, you see, suddenly the choice of the consumer has gone for this thing everywhere. The can is improving. And another reason is, let me be honest to you, is shortage of glass bottles, because 70% of the country's production is being done by the one single unit, Hindustan National Glass HNG, which has gone for the NCLT last year, which has created a lot of difficulties for all the pharma and beer and liquor manufacturers. So the need.
You're saying it's a combination. It's a combination of shortage of bottles, but also consumer preference towards cans.
Correct. And pricing has also been set by the manufacturers in such a way that can is being promoted more.
All right. Thank you very much, Mr. Arora. Good luck. Thank you very much for being with us here on CNBC TV18. And we'll speak with you soon again once we hear on those acquisition attempts in Maharashtra and, of course, the other 3 states as well. Stock's doing very well. Well, our special segment.